Hello, Excellence family. This is Christina Swengas, agent concierge for both Excellence Mortgage and Xcellence Title. I am here with our title attorney, Paul Sardon. It's Title Tuesday. Hi, Paul. Good morning. How are you?
Good morning. Doing great. How about yourself?
Doing very well. I always like to catch up with you because you always have some tips on what's happening and different ways that agents can learn to benefit their business. And
Yeah.
right now this morning, I think we were going to discuss 1031 exchange.
Yeah. Yeah. So the 1031 exchange is something that, it's kind of a complicated topic, but it's something that, an agent should understand what it is. Obviously, I always, whenever I teach this course on it, I always say, do not give tax advice to your clients or legal advice as always, unless you're a, CPA or an attorney as well. But you can point them in the direction of this, which could be a powerful tool for our agents in getting more business, more listings, and more buyers. So for those that don't know what a 1031 exchange is, it's a tax-deferred exchange. So it only applies to investment properties. It does not apply to homestead property. So, for example, we just closed one now. An individual had a property under their LLC. It was a rental property, duplex. They decided to sell it. And this is a longtime client of mine, told me, no, I'm going to sell it. I want to buy a lot that I want to build on. I found a lot, that's perfect. So I'm going to sell this and use it. And he said, I don't even know what that is. So the 1031 exchange, what it does is you have to set it up before you close on the first property. So he's selling his duplex. He's doing a 1031 exchange. He's cashing out, I think it was like $700,000.
Mm-hmm.
Normally, if he would have just taken that $700,000 in his bank account and then turned around the next week and closed on the lot, he would have to pay the capital gains tax on the earnings of that $700,000. So he'd have a bill from Uncle Sam next year when he files his tax return because he sold the property. The tax deferred exchange, what it does is allows you, as long as you do everything correctly through what's called a qualified intermediary, which is a company authorized to handle the 1031 exchange by the IRS. The funds went to that company. That company holds it in an escrow. Then he buys his property with those funds, and now he's not going to have to pay that tax on that. So the savings in this case were pretty significant. He probably saved over $100,000 in taxes without knowing about it. So why is that important for agents? Because when you have clients who are investors who are thinking about selling, that's definitely a big obstacle to selling. A lot of people, nobody likes to pay taxes. So you say, well, yeah, prices are high, but I'm going to sell it. And maybe they're tired of a property they have, and they're dying to sell it and buy something else, but they don't want to pay the tax. So now as an agent, you could say, well, have you looked into a 1031 exchange? You do that, you're going to get that listing. They're going to sell that. And then they have precise time periods to identify the replacement property, it's called, which is the property you're using the money from the first sale to purchase. So they have to identify that. So you're working with a buyer then. Your listing that you were trying to get, that you were getting a no on, now became a yes. And they're also going to buy something else, which you're going to help find for them. And so it's two commissions instead of one. So that's the basics of it. There's always limitations and you don't have to use all the money. So in one case, we had two people who owned property under an LLC. One of them wanted to do a 1031 exchange. The other one wanted their money. So in this case, we were able to split the ownership of the property, have one of them do the 1031 and the other one receive their proceeds. So it's something that if you work with the right people, it couldn't get done. You also don't have to take all the money. So let's say your property has gone up in value. It's worth $500,000. You'd like to sell it and maybe buy a condo in another building for rental that costs $300,000. And you only have to use part of it. You're going to get taxed on the other part. It's subject to it, but that part becomes tax-free. So you're deferring the taxes. The idea properties. Eventually, one day, if the second property you buy, if you sell it and you take the money, then you pay the tax on that. but it allows you to skip the capital gains at least one time. Some people I know do it and they keep upgrading properties, and they use that as their tool to make it happen. So, it's a powerful tool. It's a great tool for agents. I know one agent in particular that works a lot of 1031 exchanges, works on a lot of investors,
Mhm.
and they do great because of it. So, I know right now is any advantage we can get. It's great for us too, as we get to, represent a seller and then they become a buyer. So it's a good tool. You have to remember though, everyone asks the same question. Well, I want to sell my duplex and buy a house, but are you going to live in the house? Yeah, then you can't do a 1031 exchange. It can never be your
Investment
resident
property.
investment property. It could be from a lot to a condo, from a duplex to a fourplex, from a fourplex to a lot. It doesn't matter as long as that's considered a like kind exchange because it's all investment property. But not if you're gonna live in it, if it's gonna be a vacation home that you're gonna live in part-time or anything like that, then you don't get the tax benefit.
So that
So
is key. Investment
yeah,
property. I think something we've seen is many times people realize it after the fact that they can benefit from this and they come to
yeah.
us after they've closed or just before closing.
Right. The day of the closing, I go, we've already wired them their money, and then they call me the following week, like, I want to do a 1031 exchange with us. Once that money touches their account, they're done. You can't go back once the transaction is closed. Even if the full amount of money is there, once it touches their account, there's no that money becomes taxable. It has to be set up ahead of time. So that's another thing. If you're an agent and you're working with a client who mentions they're doing a 1031 exchange,
Mhm.
make sure that they're 1031, they know that entails hiring a company, which is going to charge a fee and has paperwork that needs to be completed by the buyer and the seller. Has to work with the title company because they also have to sign in on the closing statement. And the money from the sale has to be wired to them. If you're waiting till the day of the closing and somebody tells you, "Oh, you're getting a bunch of money," then it's too late.
Mhm.
Yeah, and most contracts in the FAR bar as is, it's written in that if the seller is doing a 1031, the buyer is going to cooperate with them. They don't have to delay the closing or incur any expense in doing it, but they do have to cooperate in paperwork that's needed, as signatures, confirming the transaction, and things of that nature. Yeah. So, I mean, I think that's a good one. It's a good, and then they're usually buying more expensive, right? So they're selling something and sometimes they're using the proceeds and also putting in extra money. So they use more commission, more transactions for us all.
And putting the money to work too, because you
Yeah.
can pay Uncle Sam or you can put it towards yourself for a future
Right.
property. I think the
Yeah.
key is just due diligence ahead of time. Educating your client. If it's an investment property, they're looking to sell and buy something else, that this can exist. Give us a call, do your homework up front so that the client is not
Yeah.
in a last minute situation, realizing they can take advantage, and
Right.
make sure it's a good fit, right? And then we can plan
Yeah.
ahead and work with them.
Yeah.
Uh, and like you
Def
said, there has to be an intermediate to receive the funds. They don't
right.
receive the funds. So there's some planning involved, but I think it can definitely benefit the client and avoid
Yeah.
taxes, right? So
Yeah. 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 Definitely. And we ourselves, I am not a qualified intermediary appointed by the IRS, but we work with several companies that we refer to people that do that I know are serious and get it done and not too expensive. They pay it paid at the closing. But yeah, it's almost always worth it. And the key there is, and I've heard it from several agents, that I used to teach a class on 1031 exchanges at the board, and I have heard like positive feedback from people saying, "Oh, I was able to get this listing because maybe a client has a condo in a building and they're sick of dealing with the management there or the association there, and they would love to sell it, but they don't know what they're going to do with their money, or they don't want to pay taxes on it." And then now you say, well, have you heard of a 1031 exchange? Put them in touch with us or have them talk to their accountant. We'll explain what it is, and maybe that'll lead, somebody listing that wouldn't have otherwise listed with one of our agents.
absolutely. Now I have one quick question. What is the turn time? Like once you've sold one property, by how soon do you have to have closed on the second one for this to work?
Um, I'm not sure the exact time frame has changed recently, but I know that there's a period where you have to identify. When you close, you don't even have to have identified what you're going to buy. I think it's a 90-day window. from the time you close to identify. You can identify several properties that you're interested in purchasing. Then you have to be under contract. And then you have to close within a certain period, but it's pretty flexible on the amount of time to close, but you do have to identify. Usually people have something identified already. But I have run into, especially in large, I deal with a lot of commercial transactions, and there is times where people are desperately trying to find something to buy because they're running out of time on 1031 money that they have parked. So you do come across that every once in a while, where maybe something falls through and now they need to scramble. But usually it's ample time. The only time you run into issues is if it's like a large land play or you're talking millions of dollars and there's zoning requirements that need to be changed and you need more time of due diligence. So in those cases, it's somebody selling a rental condo to buy another one, or buy a duplex, or buy a house to rent out. It's typically not an issue.
Well, I think it's definitely a good idea to reach out to us. Paul is always available for us, exclusively for our agents, for you. Any questions you have with a 1031 exchange or anything regarding title, Paul, we appreciate the time and dedication that you give to us to support our agents. Quick questions, call us. You can email us. We are here to help out. You can reach us at 305-595-7355. The option for title, you can also email us at support@excellencetitle.com. So we look forward to hearing from you. And is there anything else we should know, Paul, about the 1031 exchange?
No, I mean, it's a whole, I gave the basically a synopsis of what it is and how it benefits what the agents need to know. There's obviously complex issues, tax-wise, that could arise, and you can't really give tax advice, but it is a good tool. So, I think if anybody has any further questions about it, feel free to reach out.
Great, we will. Well, thank you so much, Paul. Thank you. We wish you a great rest of the week. And we look forward to hearing from our Xcellence family. Take care, everybody. Thank you. Bye-bye, Paul. Take care.